For more on the Fed decision, we're joined now by Bloomberg's Michael McKee. He is also in Washington, D.C. And Mike, I don't know if you heard us talking to Meredith Whitney. She suggested that maybe the Fed could dial back a little bit on quantitative tightening today. What are you expecting?
Well, right now I'm doing the body language you were talking about from Jay Powell, because he doesn't want to give anything away today. I mean, the Fed is in a situation where they're darned if they do, darned if they don't. There are people who think they should be prematurely or preemptively cutting, rather, and others who think that would be really dumb. So you're not going to get any change in interest rates today. There are no new economic forecasts, no new dot plot. What do we get? Jay Powell. And Powell, as you mentioned, is going to be the key to any headlines today. He's going to say we can afford to wait. It's better to be late than to be early in the wrong direction. And if we ask him about Donald Trump, I'm sure he'll say again, I'm not going to comment on that. As to Meredith Whitney, at this point, I don't think the Fed's going to be considering dialing back on QT because they already did. They capped it at $5 billion a month now, so it's barely moving down, and it's just kind of in a holding pattern. They're getting very close to the end, so that wouldn't really move the needle at all. This is Fed Fund futures, by the way, for July, which is when people think maybe the first move might be. And I just want to point out that Fed Funds futures trading is basically useless these days. You can see the volatility there. Every data point, every Trump tweet, everything that comes out moves this around. Nobody knows what's going on, and so we're not even going to have a good idea after Powell what's going to happen. The markets will do their interpretation, but he's not going to say anything that would give people a definitive idea of where to put their money on those futures.
I'm going to keep a close eye on your body language when I ask you this question, because in our conversation with Meredith Whitney, she also said that she could see the unemployment rate rising to maybe 6% by the fall. But she also expects that the Fed would only cut about 2 times this year, even in that scenario. And Mike, I'd love for you to, look back to prior periods. And if we did get somewhere close to 6% on the unemployment rate, I mean, how would the Fed respond to something like that, given that we're at 4.2% in April?
Well, she's going to be on the high end. Most people don't think that they would get anywhere close to 6%. The high forecast I've seen from other people on Wall Street is about 5%, but that's over the course of a year and a half. If we got a move to 6%, the Fed would definitely be cutting. It would be a sign that the economy was in big trouble. And between now and the fall, depending on how fast this move came, they would probably cut at most meetings. Now, do they cut if it goes up very slowly? Not the same rate, but they would, if they get maybe above 4.5%, 4.6%, start to consider cutting, depending on what's happening at the same time with inflation.